Hi, welcome back. This video is the first in a two-part series on how to invest as a non-professional. So what is actually out there for you to invest in on a daily basis. And in this first part of the series, we're going to focus on public markets, as we spoke about in an earlier video. So the public markets, as we've spoken about, is split into the stock market and the debt market. So the question is, where do professionals fit into both? And I'll go through that in this video. And I'll go through into a bit of depth of how you invest in a stock. On the most basic side, what are you looking for? So this shows the slide here that you have the stock market on one side and the debt market on the other. So within the stock market, we spoke about there's a primary market, which is the first time the shares are being issued to the public in an IPO, or initial public offering. And then you have the secondary market, where those shares are then being traded on and on over and over again, and people are hoping that the share price will go up if they buy, and obviously they're thinking it will go down if they sell. So the primary market, or these IPOs, are purely institutional, and by institutional I mean these are pension and investment funds, companies and governments, people with vast sums of money, or bodies with vast sums of money that are investing a lot of money. So that's why it's kind of somewhat restricted to them, because when the first time a company offers its shares, it doesn't want to be dealing with loads of tiny shareholders. It wants to do it in one go. So it's only available for these organizations with a lot of money at their disposal. But as what's called a retail investor, this is us, this is everyday investors, non-professionals, we can invest in the secondary market. So we're buying shares off those people who maybe initially bought them, or of the people who bought it off those people, and over it goes. And that's really just called share trading. So that's where we fit in. And in the debt market, you can see there's just one cross. There's no way to really invest in that as a retail investor. It's only institutions. And again, it's vast sums of money, and pretty much the systems aren't in place for us to be able to deal in very small quantities, to be lending money, as happens in the debt market. But as we'll go through in future videos, there are ways to invest in the debt market through other means, such as funds, where people are doing it for you. But unlike in the stock market, where you can buy a share, you can't very easily just buy one bond, say, in a company or in a government. So now I'm going to go into a little bit more detail into how you invest in a stock, considering that in the public markets is really what you've got. So the first thing you do is you find the symbol of a stock. And in a previous video, we went through the Amsterdam Stock Exchange, and we saw all the companies in there. We saw that they had their names, and they also had these symbols. So IX was, well, IX, because it's just a four-letter one already, AJAX. So you find that if you want to buy it. You then see what the share price is, so you know how much you have to pay for each share. You decide how many shares you want, which is somewhat connected to how much you want to spend or invest in this company. And then you place your order with a broker. And nowadays, brokers are all online. You can do it through a phone or through online through a website. Back in the day, you'd call up your broker and say, I want to buy something, and they'd do it for you. But now it's all online, which is very easy and cheaper as well. So a brief example of what to look for. So say you want to invest in Philips, obviously one of the biggest companies in the Netherlands. So you can go onto the Euronext, that's the stock exchange website, type in Philips, and it will show you really all the information you need to know to be able to buy it, to be able to place an order with this online broker. And you can see here you have the symbol, which is PHIA. That's Philips. I don't know how they get the IA, maybe Philips Amsterdam. It's always, can be a little random. Then you have the share price. You can see at this point in time it was 42 euros, 0.305, and this changes all day when the market's open based on how much people are willing to pay. And then randomly I say you want to buy 10 shares, say, so you obviously have to times 10 by 42, and then you get this overall value you're paying of 423 euros. So you know this, you give it to the broker, and in a future video we'll go through how you can actually use a broker to place an order. But this is just a bit of background on how you can invest in a stock. So Thanks again for watching the video, and I'll see you in the next one.